It's very interesting that a lot of people are describing gold being in a slump. Gold is above 3,900. A month ago, that's an all-time record high, right? A few months ago, if you'd have told anybody that gold would be at 3,900 and change in November, they'd have been, no way, it's not going to get up that high. All we did is we went a little bit too far too fast. Gold got extended up to almost 4,400 and then had a sharp couple of day pullback. But gold is in a powerful uptrend. This is a massive bull market. Silver is still around $46, $47. Yes, it's below the $54 that it hit a couple of weeks ago, but it's way above where it was a month ago. It's way above where it started the year.
We are nowhere near the top of the precious metals markets. This bull market would be 2.6 times greater in magnitude and 3.1 times longer than the 70s bull market. But it was projecting $9,000, $10,000 an ounce gold. I do believe that you are absolutely going to see the gold-silver ratio at 20 or less. So that means silver's value rises compared to gold.
The precious metals market continues to show volatility as investors seek safe havens amid growing global uncertainty. Spot gold has surpassed $4,100 per ounce, marking the first time since October 27th, with a daily increase of 2.48%. Market sentiment suggests that more investors are turning toward hard assets to hedge against potential downturns. In the recent discussion, Peter Schiff, a well-known economist and CEO of Euro-Pacific Capital, emphasized that current monetary policies are unsustainable and that gold and silver are undervalued relative to the risks in the financial system. Schiff warned that continued debt expansion and dollar weakness could trigger a major shift toward precious metals as real stores of value. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I think it's very interesting that a lot of people are describing gold being in a slump. Gold is above 3,900. A month ago, that's an all-time record high, right? A few months ago, if you'd have told anybody that gold would be at 3,900 and change in November, they'd have been, no way, it's not going to get up that high. All we did is we went a little bit too far too fast. Gold got extended up to almost 4,400 and then had a sharp couple of day pullback. But gold is in a powerful uptrend. This is a massive bull market. And it's classic that you have this sharp decline. Almost all of the decline was one day, right? We had a 6.5% drop in a single day. It's gone down a little bit since then, but that was the lion's share of it. And it scared people, mainly the people who got in recently because they saw gold going up every day and figured, well, let me just hop on board. It's going to be a smooth ride. And then they got a big drop. And obviously some people might have been cute. They might have used leverage. Maybe they were in the futures markets. Maybe they had some stops and they got ran. And so, but the psychology, even here, we're at this gold conference and the mood is not nearly as, exuberant as I would have expected. A lot of people are a little nervous, taking profits on their gold and on their gold stocks. The opposite of the Bitcoin conference that I was at in over the summer, where there were 35,000 people, right? We don't even have 1,000 people here. Yeah. There are 35,000 people, and everybody was optimistic. There was nobody that thought Bitcoin could go down. Everybody thought the sky's the limit. We're going to the moon. 1 million, 10 million, bet the farm, mortgage the house, put everything in Bitcoin, right? That's enthusiasm, right? Here, it's skepticism, it's fear. People, yes, they're bullish, but they're nervous, And so I think this is a big bull market. Silver is still around $46, $47. Yes, it's below the $54 that it hit a couple of weeks ago, but it's way above where it was a month ago. It's way above where it started the year. So I think it's just, the trends are intact. We shook out some of the, the new, buyers that, really, were leveraged or don't really have, belief in the trade. So the weak hands maybe have folded already. And we worked off an extremely overbought condition. Gold was as overbought as it's ever been. And so that's not the case anymore. And we got this correction out of the way, and we're still at 3,900 because we went up so far so fast, we were able to have a correction, yet, we're really correcting to 4,000. I think 4,000 is about the support. Even though we're below it, it's like 3,000 was support. When we first broke above 3,000, we had several trips back down to 2,900, and then we took off for good. And I think we're doing now around 4,000 what we did earlier at 3,000. And so people who have been thinking about Bitcoin as some alternative monetary system, when that falls apart, hopefully they'll realize that gold can do all the things that Bitcoin promised to do, but can't. More investors are waking up to the reality that, gold has outperformed stocks for the past 25 years. That the thesis behind gold, the investment thesis, is stronger than ever. Central banks are committed buyers. They're de-dollarizing. They're moving off the dollar standard back to the gold standard. They're going to keep buying gold. Institutions have finally discovered gold. So it's a great story. And gold mining companies, gold's not going back down below 3,000. Right? It's not going to get much below 4,000. But even if you think it could fall to 3,000, 3,000 is a great price for these mining companies because their cost of gold may be $1,400, $1,500 an ounce. Yeah. That's huge profit margin. There's very few businesses that have margins that high. Yeah. And that's with the price of gold falling. But what if the price of gold just keeps rising, right? The problem for a while for the miners was that even though the price of gold was rising, the cost of mining it was rising faster. Now, it's the opposite. Gold prices are rising much faster than production costs. And so these companies are going to be making a fortune.
The gold and silver markets are drawing increased investor attention as economic uncertainty deepens. Gold prices remain resilient near recent highs, while silver shows steady accumulation, signaling a possible breakout ahead. Analysts believe that persistent inflation, global debt, and central bank buying are setting the stage for a powerful upward trend in precious metals. In a recent discussion, Mike Maloney, renowned author of Guide to Investing in Gold and Silver, predicted that gold could eventually surge to $10,000 per ounce as global currencies continue to lose purchasing power. He emphasized that silver, too, may follow gold's trajectory as investors seek protection from devaluation and systemic risks in traditional markets. Now let's get into the interview.
What is gold and silver signaling, and gold in particular probably signaling to you right now?
We've had such a run-up in gold and silver recently, so there's an excitement going on here. Central banks are still buying. It definitely has not peaked. In this last run-up, it was basically Asia and and India pushing the gold price, and it was physical demand instead of all the gambling on the commodities exchange and the LBMA. And so it's telling me that we're getting closer and closer to a crisis, and it's impossible for bubbles to just go on forever. So we're at a period of time where they are trying to kick the can down the road, but with things at the extremes that they are at right now, I'm expecting something within the next year or so. I'm actually surprised that we got through October with no big event. October is always that spooky month. It was nothing compared to the final months of 1979 and the first month of 1980. It was an insignificant move. So as the price goes up of something, usually anything, there's less demand because people they look for a less expensive alternative. Gold and silver violate that, and we just saw that with this run-up. This run-up was largely caused by physical demand in Asia, Australia. It was interesting in the United States, we weren't participating yet. In fact, there was a lot more sales than buys, and refiners in the United States got all clogged up. It is sad to see the East buying and the West selling because it's a wealth transfer that is going on. And we are nowhere near the top of the precious metals markets, and the things that tell you that are things like the Dow gold ratio, the gold silver ratio, In 1980, when gold and silver peaked on the same day, the ratio between gold and silver took 14 ounces of silver to equal the value of 1 ounce of gold. And that is about the natural ratio is that there's about 19 times more silver in the Earth's crust than there is gold. Silver tends to occur more up toward the surface, and gold is deeper. And so when we would dig it up back then, the reason that the gold-silver ratios averaged about 15 to 1, somewhere between 13 and 16 to 1 all over the planet, was simply because if you've got a certain number of coins in circulation, you got 13 of these silver coins for each one of these gold coins in circulation, it's the free market. Yeah. Finding this equilibrium, the exchange rate. And right now, at 85 to 1, I think is what it's at. And during COVID, it shot up to 120. Silver has never been that cheap compared to gold. And I do believe that you are absolutely going to see the gold-silver ratio at 20 or less. So that means silver's value rises compared to gold. This is a major shift, and it sort of signals that we're probably going into the third and final phase of the bull market, which is the greatest gains in the shortest period of time, usually. The bull markets have 3 phases. And this final phase, like I said, greatest gains in the shortest period of time. Well, what are the gains that we've had so far? We've gone from 250 to 4,500 bucks an ounce. These are some huge gains already. If you look at the, we created an interactive chart where we overlaid the bull market of the 70s with the bull market of today, and then there's something called Elliott wave analysis. When we matched the very bottom and that top up, it was projecting that this bull market would be 2.6 times greater in magnitude and 3.1 times longer than the 70s bull market. But it was projecting $10,000 an ounce gold. And it's interesting to see these major banks and financial institutions, they were telling you to stay away from gold when it was 250 bucks. And now that it's $4,000, they're saying, oh, maybe you should put 20% of your part. Why? Because it's been the number one performing asset class of this century, since the year 2000. The only thing that has outperformed precious metals is cryptos. But if you start at zero, from 0 to 1 is an infinite return. So cryptos have done spectacular. I've been in them since 2014. I told my insiders about it and recommended that they take a position in cryptos. But as cryptos go up, I sell some and I take profits and turn it into silver. So I think that we have some spectacular times ahead of us. Now, can you imagine if Morgan Stanley is the 60-40 portfolio with 60% equities and 40% bonds, and they're saying sell half of your bonds and convert that into gold. Now, if that happens, you're talking prices way north of $10,000 an ounce.
As the global economy faces tightening financial conditions and shifting investor sentiment, the message from top analysts remains clear. Preparation is key. Both gold and silver continue to represent not just opportunities for profit, but also protection against the uncertainties shaping the financial landscape. With every market swing, these assets are reminding investors why they've stood the test of time. Looking ahead, deeper insights and debates among experts like Peter Schiff and Mike Maloney shed light on what could be the next major turning point in global markets. Stay connected for more grounded perspectives, expert forecasts, and economic updates that help you navigate this evolving era of money and metals. Don't forget to like, share, and subscribe for continued coverage on the world of precious metals and financial trends.